All right, we're one quarter into 2025 and the real estate market is starting to heat up. Let's talk about some of the dynamics going into the summer, into the busy market of the year, and what you can do to win. Here we go. I'm Sam, and this is the Living in Tampa channel, and as always, we make these videos for you about what it's like to live and move to the whole Tampa area. We're also a team of realtors, and we'd love a chance to earn your real estate business. Let's talk about the market a little bit today. So the market in Tampa has had some ups and downs, and we're gonna screen share and look at some charts and all that kind of stuff. We're gonna talk about four big factors. We're gonna talk about median price, months of inventory, days on market, and interest rates. And we're gonna look at the change from 2020 to quarter one of 2025. And I can go either way on that range. Maybe we're looking at too big of a range, or maybe we're looking at too small of a range, but it has changed quite a bit. And sometimes it's just hard for us to think back too long ago. Even myself, I bought my first house in 2017. It's hard for me to even remember what the market was like back then. I know it was a little competitive. Rates were in the fours, and we got our house for like $3,000 less than they were asking. But we didn't have a lot of leverage, and it was gonna sell fast, and it was kind of, you had to find the place and move on it pretty quick. So that was 2017. That was my first house. 2020 was my second. 2023 was my third, and they all feel like such different markets. Now, I'm not looking for a house again yet, but if I keep going with the same pattern, it's really every 3 years. And also, since then, we've gone from 0 kids when we bought the first house to 3 kids now in the third house. So if we keep adding kids, we might need more house. But let's break down each of these factors first. Let's talk about median price. Now, median price, we're gonna look at the three main counties of the Tampa area: Hillsborough, Pinellas, and Pasco. The reason I like median price is it kind of just shows where the water level is. It doesn't tell everything. And maybe you don't fall in the median price, but it just shows the change of the water level, and that's why I like it. I had this experience on my honeymoon. We were in Maui, and we took this boat out to this other island to swim with these wild dolphins, and I thought I was gonna drown as I was swimming back. And I'm still not a very strong swimmer. I started to say I wasn't a very strong swimmer, like I somehow got way better, but no, I'm not a super strong swimmer like my wife is. I'm like, go ahead. I started turning around. I thought I was gonna drown. And then I was like, trying to calm myself down in the water and like rest my legs for a minute, and my knees hit the bottom of the ocean. It was not in very deep water, but the median price is kind of our water level, and it kind of shows us where we are and kind of the bigger, broad changes of that whole ocean. Then we'll talk about months of inventory. Now, months of inventory is an interesting factor because if you're not a realtor, you do not care about this one. But let me tell you why you should care about this. This shows the shift from seller's market to buyer's market. Is really what we're going to talk about with that. Because inventory got so low during the pandemic, it was a seller's market, meaning sellers could ask a really crazy price and force people to waive certain things, and it was they held all the control. The buyers had to conform to them, and it's a little bit different now. So now we have quite a bit more inventory. We still are not into a buyer's market completely, according to the standard thoughts around that, but we're getting close to it. And you see just behavior is a lot different. We have 7 listings going up this month here in April, and we have mixed sellers. Some of them are very ready to go have a competitive price, have a low price. Others are still stuck in that 2021, 2022, where they think, well, my neighbor sold for this, so I can sell for that. That's not how the market works right now. Whenever there's very limited inventory, it does, and we'll look at the charts to kind of break down those details. Then we'll talk about days on market. So this is how many days of time on the market of public exposure does it take to go under contract. Now, this is often dependent on the price. Any home will have less days on the market if the price is lower. If your price is higher, or if your home is really unique, or it's you know, a certain price point or a certain kind of setup like waterfront that maybe takes a little bit more time, days on market is understandable. But when it's just apples to apples, lower price equals less days on market because you stand out from your competitors and somebody is able to get a better deal. Actually, as I'm about to relist my house that flooded, a lot of others that flooded are relisting as well. And they are asking high. I'm so ready to go way under them and let somebody walk into a bunch of equity in this house. And then lastly, we'll talk about interest rates. Interest rates have changed so much over the past 4 to 5 years. They went from record lows to kind of normal mid-range interest rates, but that change in interest rates feels so extreme to us, especially if you were looking at what you could afford in 2021 and now it's 2025 and your job is moving you, or you finally get around to buying, or all those kind of factors make it kind of a very different impact on you, especially when other things have changed too. That dynamic between the median price going up and interest rates going up changes affordability dramatically. But let's look at the data. All right, we're going to start here with median price. Median price back in 2020, and we've got Pasco County in green, got Hillsborough County in blue, Tampa average in purple, and Pinellas County in pink. We're looking from 2020 all the way projecting out to Q1 of 2026. Well, this is where we are right now, Q1 2025. So back in 2020, our median prices for Pasco County was $240,000, Hillsborough was $280,000, and Pinellas was $300,000, making the average for the Tampa Bay area $285,000. You can also see there the average mortgage rate, which we'll get to at the time, was 3.1%. Now that increased, not the mortgage rate. The home prices started going up. As the supply went down, the prices went up very dramatically. This change from 2020 to 2022 was a giant change. So let's look at just the average. So from 425, and it came all the way from 285. So that was a big jump from 285 all the way up to 425. Then after 2020, it kind of leveled out. And we'll look at exactly why. It even went down a little bit here. It stayed pretty level from 23 to 24. And then over here, so from 2024, the Tampa Bay average being 415 over to Q1 of 2025, it's 410. It's down just a tiny bit. Now, a lot of that has to do with interest rates, and we'll get to interest rates at the end. Let's look at months of supply. You can see that dip in 2021 that I talked about earlier was right here, and that was a big problem. It was hard to find people houses. We had 0.9 months of inventory, which means say that 10 houses are selling every day. At that pace, we have less than 1 month of houses to sell on the market right now. That's how those numbers work. 2020, it was a little higher. This was, as an average, some of the year was a little more normal in 2020. And then it started getting more and more aggressive as rates started coming down. Our average rate by 2021 was under 3%. Then 2022, our months of supply started going up. Now our average for the area was 2 months, and our average interest rate was 5.3. Going to 2023, we had 3 months of inventory, over 3 months of inventory, and our average rate was 6.6%. That's when I bought this house I'm in right now. The standard kind of rule of thumb is when there's 6 months of inventory, it becomes a buyer's market, which means the sellers have to be more flexible with the buyers. Going over to 2024, so we're at 3 months here and 6%. Then we went to 3.5 months and 6.9%. Then we went to 4 months and 6.7% right now. So we're currently at 4 months of inventory in the market, but from our experience, it's feeling more and more like a buyer's market. Now, it's not that sellers have to cut their price like crazy, but they have to give up some of the potential, the trajectory they thought they had. So let's look at the change in mortgage rates. This change in mortgage rates from 3% to 7%, let's just say 3% to 6% over here, saying maybe we'll come down a little bit. But the change from 3% to 6% means that chunk of your mortgage payment that is interest doubles. So my mortgage payment on this house is right around $3,000. And a lot of that is interest, right? If you've seen a mortgage payment, you know a lot of it is interest. Let's say $2,000 of that is interest. But if I were to buy the house in 2021, only $1,000 of that would be interest. A $1,000 monthly reduction in my mortgage payment. Or if you were shopping here in 2021, all of a sudden your mortgage payment, not only did home prices go up from then, but mortgage rates went up, which have a bigger impact on your affordability. I'm not saying any of this to scare you guys. I just want to show you what the market is like right now. And from the perspective of the realtor that wants you to buy and sell real estate all the time, it's great. But what that practically looks like is our buyers are coming into situations where they get to negotiate pretty hard. We're making offers well below asking price. We've been doing that for years. We were doing that even in the pandemic. But then when stuff comes up during inspection, or we're asking for other terms like closing costs or like who pays the commission, sellers are having to be a lot more flexible right now. And our buyers are feeling like they're walking into more and more equity, into a more comfortable situation because they had a little bit of leverage in the negotiations and in the house hunt. And our buyers are a lot happier than they were in 2021. The thing is, in 2021, they were having to like give appraisal gap waivers and all these other kinds of things, but they were quickly gaining appreciation over the next few years. So even though the market seemed like it didn't favor buyers back then, the growth favored buyers in the next 2 years, and now the market overall is favoring buyers. But the inventory is still not high. We have 4 months of inventory. For it to seem like it's too much, we would need 8 months of inventory. We would need double the inventory. Interestingly to me, the days on market and inventory numbers in Pasco County have continued to go up and up. A lot of that is new construction though. New construction kind of skews these things because these builders list their houses for sale 9 months before they're finished with the neighborhood, and they just use that same listing to keep the traffic coming in from the MLS and from realtors. And so it skews it a little bit. Yeah, maybe in Pasco County, houses do sit a little bit longer, but it gets skewed a little bit. And the reason why we didn't look further back, which we talked about in the beginning, is right now, days on market being an average of 50 to 60 for the Tampa area is the same as 2019. Now in 2019, we weren't like, the market's crashing. It wasn't that until the pandemic happened. Then people thought all kinds of things. But just a reminder, during that year of 2019, we weren't thinking something was wrong. So why would we think something is wrong now based on how many days a house takes to go under contract? It just takes that long because of a lot of factors. So what are economists projecting for the rest of 2025? They're projecting very little increase, kind of the standard appreciation that you would expect in most housing markets. It maybe goes up between 3 and 6% in value. But when we look at the growth compared to the pre-pandemic levels, the Tampa Bay area has grown 60 to 70%. It's one of the highest market growths in the whole country, and a few Florida markets are on that list. I think Miami being number 1. But if you're thinking about moving to the area, it is not a bad time at all. There are a lot of options, and as a buyer, you have a lot of leverage right now. It's super fun to help buyers get deals they're really excited about right now. So as always, we would love to hear from you. If you made it to the end of the video, please reach out to us. And also, I wanted to invite you guys to our webinar. We do these webinars every other week. It's not here on YouTube. We do it on Zoom. It's super personable. It's super fun. Any questions you have about relocating, about the market, about anything specific, real estate, Tampa related, or other Tampa related stuff, we'd love to see you there. But as always, thanks for coming by.